What's up, ladies and gentlemen? Welcome to the Beat of Business with me, Ravi Wadan. Now, when I woke up this morning, I was drinking my coffee, I was hanging out, having a good time, and I turned on CNBC, and it felt like the end of the stock market. It felt like the end of the world. Everybody on CNBC was talking about how this could be the beginning of the stock market crash that we've all been waiting for. Now, Chairman Powell was on TV, and simultaneously the markets were in retreat. And the main reason for that retreat was the yield on the 10-year Treasury note, which is one of the most important benchmarks in the global economy, had surged to 1.37% today from the 0.917% that it was at the beginning of the year. Now, to make things simple for all of you watching, when US government bonds experience a sharp rise in yields, investors' appetite for riskier assets like technology names decreases. And that's what we saw today when the markets opened. There was also a lot of concern about inflation with all of the government stimulus that's being put into the system. But thankfully, Chairman Powell's comments mostly addressed investors' concerns and the market came roaring back. I mean, just look at this chart that I saw in the Wall Street Journal that shows the one-day performance of the S&P 500, the Dow Jones, and the NASDAQ, and you can see that they opened up and took a nosedive and slowly recovered, with the Dow and S&P actually ending up in positive territory. Anyways, back to my morning. I go to Twitter and everyone is saying that today is the day that the market crash begins. I know that many of you are just entering the stock market and maybe are new to investing, and I know that many of you have been trading for decades, but regardless, it's times like this that we need to stick to our convictions. We need to remember why we made certain investments, and we need to remember not to panic. We only need to go back a year or so to March of 2020 when coronavirus was officially declared a pandemic. Now, while many of us were trying to figure out how to buy our basic day-to-day necessities like toilet paper, masks, all the antibacterials, the stock market and global economy were in a mess. Now, businesses were closing and supply chains were coming to a halt, and at that time, it felt like things couldn't get any worse. And even I, at the time, was thinking that this could potentially be the biggest market crash of my lifetime. In the early days of the pandemic, I just didn't see the light at the end of the tunnel, and I couldn't imagine a way out. I remember thinking, this is big. How are we gonna get out of this one? And at that time, it was just too big for me to wrap my head around. Now, if you were checking your portfolios or investments when the pandemic first hit back in March, you probably had a sense of panic as you see the money that you've worked so hard for your entire life diminish drastically in the matter of weeks. Now, let's fast forward to today, and even though the markets have regained all of the ground that they lost and then some, there's still a lot of worry and speculation about 2021. My point is that you need to stay informed and educated on what's going on in your portfolio and what's going on in the broader economy, but at the end of the day, your panic and worry will only cause harm and won't do any good. Now, throughout history, the market has gone through many extreme ups and downs. When we look back, we're reminded that yes, a market crash is a very difficult thing to go through, but it's something that we can and have overcome. Now, this one's going back quite a bit, but let's talk about the stock market crash of 1987. The market lost 22.6% of its value in one day, known as Black Monday. But within 2 years, it had recovered everything it had lost. My second example is September 11th, 2001. Terrorist attacks in our country caused a major nosedive in the market, but it corrected itself quickly. Just 2 months later, the stock market had returned to September 10th levels. Now let's talk about the Great Recession of 2008. The Dow Jones Industrial Average lost about 50% of its value in a very short time. However, after a couple of years, the market was stronger than ever before. We were essentially in a bull market from 2009 to just before the coronavirus pandemic. Speaking of the pandemic, let's talk about the coronavirus crash. In March of 2020, the COVID-19 pandemic triggered the most rapid global crash in financial history. However, the stock market regained ground relatively quickly, and the year closed with record highs in all major indices. Now, there is no single person on this planet that can tell you whether or not the stock market is going to crash in 2021. The reason I made this video is to remind everyone that we have been through a lot worse as a society, and at each time the markets crash, they always rebound. So please consult someone you trust or consult your financial advisor as to how you should play a market crash. But for me, I look at these crashes as buying opportunities. As much as you want to hit that sell button when you are in a state of panic like today, I want to remind everybody to not look at it like the end of the world and to not look at it in a negative sense. I want to inspire everybody to look at dips like the one that we had today in a positive sense and to look at them as a buying opportunity. And that's why it's always important to keep a portion of your portfolio in cash so that you can capitalize in times like this. Anyways, thank you for watching today's video, and be sure to hit that like button for the YouTube algorithm. If you've missed any of my past videos, you can go straight to my YouTube channel, or you can check out my website, thebeatofbusiness.com. Thanks.